All right, what is up, guys? So it has been over a little over 2 weeks since I last posted, I think, maybe even three. Um, because I was just taking a break, I guess. But we are going to be back now, start of the new year. I'm not gonna be back because of the start of the new year. I'm just back because like I'm trading now. Like I wasn't trading that much before because of all the holidays and stuff. So yeah, I hope you guys had a Merry Christmas. Hope you guys had a Happy New Year. And I hope you guys are ready to start off your 2020, or I hope you guys have already started off your 2026 well, I guess. So, ever since those last two videos, I got a few more payouts. So, I'll show you guys those real quick, just for the proof of things, because that's what the channel needs, I think. Because people have been doing a lot of fake stuff recently, if you guys have seen. So, yeah, I'm gonna refresh the page on this. So, I got two 1K payouts on core accounts. So, boom, 800, 800. And if we go to here, um, I'm about to get another 1K payout. I just need 2 more days. I got the third day today. I just need 2 more days of 100 to get another 1K payout. So that's MFF. And then here's Fundednext. So I'm gonna refresh the page on this. I mean, you can't even edit this because like it's a picture, but just in case. So I'm gonna refresh the page and I'll download the PDF. I got a $1,500 payout from Fundednext. The reason it's 1447.5 is because they took like a 3.5% fee, I think. They're supposed to take a 20% fee. Like it's supposed to be 80/20, but for some reason I got the full amount. So I'm not gonna complain. Like I'll take the extra $247. But yeah, I don't know if they accidentally gave it to me or something, but I got extra money. So I won't complain about that. And then also passed 3 Apex accounts today. I'll disconnect and reconnect that. There's a 90% sale going on. If you use any influencer code, you'll get 90% off, and the activation fee is only like $60. So if you guys want to take advantage of that, I just passed 3 accounts today just because, I mean, if you guys look at the chart, there were no trades. Like it looked really ugly, so I just passed some evals. So let me load that up. So boom, you guys see 3K on each account, and that's probably what I'm gonna put in the title, just to get some new viewers, I guess. But yeah, that's really it. So since there's nothing to really talk about with the trading day today, I'm going to give you guys literally like the model, one of the models I use, like step by step. And I'm not gonna put in the title because only my real viewers will get to see it, right? So let's just do that real quick and give you guys a step by step continuation model that will actually work. You guys can go back test it, all that stuff. So let me make sure I show you. So I showed this. Yeah, so I think I showed everything. And then I'm gonna close this now and let's get right into it, right? So it's not my model. I'm not gonna sit here and say it's my model. It's something I learned from PB Trading, and is there continue. I mean, I don't know if like it's there. It's probably just ICTs, but like it's the one they teach. It's like a inversion fair value gap continuation model. So the reason why I'm showing you guys continuation is because continuation is the easiest way to get your first payout, right? So basically, you guys already know how to go on the higher time frame. You find draws and liquidity. So for example, we have draws and liquidity. Let's just write some down. Like previous day high. Whoa. Previous day high. Previous day low. Previous week low. Previous week high. Previous week low. Stuff like that. 4-hour highs and lows. 1-hour highs and lows. Session highs and lows. Okay, let me zoom in a little bit so it's easier for you guys to see. Session highs and lows, and then high time frame unmitigated gaps. Okay, and then like NWOG, NDOG, stuff like that. So this is not even close to all the draws and liquidity, but just to keep this video kind of short, these are some draws and like examples of draws. So you guys can base this off of other draws you see. So you find your draws, right? And then you see what we did. Like you see what the price did maybe overnight. You get your daily buy. So for example, if you guys like see my recaps from before, I use midnight open a lot. I use like manipulation legs. I see what we did overnight. I see where we're drawing towards. I see what we took out overnight to determine if a higher low is protected. So for example, let's say overnight, let's say like right here, right? Let's just see right here. Let's say like just keep the time, like don't worry about the time for this. But let's say like this is a 4-hour unmitigated fair value gap, right? And then overnight, London session came down. So Asia lows and Asia lows, I mean, yeah. So Asia session made the fair value gap. So let's say London came down and took out Asia lows. while mitigating this 4-hour gap, right? And now we're learning off of it going up. Maybe you're looking at New York session, maybe it did something like this, like maybe it's doing this right now, something like this. And it's like, okay, so from here you can determine that this low is protected, right? London session low is protected because it took out Asia low and it tapped this 4-hour gap. So now you determine that that's protected, you can be bullish, right? So that's an example of like something on how to find your daily bias, stuff like that. So now the next thing you do is you try to find draws and liquidity to the direction your bias is, right? So if we're bullish here, I'm just gonna write down a little bit. Again, this is not a full tutorial. This is just something I'm gonna do because I don't know what else to post today. So right here, let's say you found bias, right? And in my opinion, guys, honestly, at this point, I think daily bias is fake because I don't even use it anymore. I just react to what the market's doing. But for a basic continuation model, this is something you could do. So you find your bias, you're bullish. Why are you bullish? Because found bias. What am I saying? All right, found bias. Let's say it was bullish. And why are you bullish? Because London lows took out Asia lows. So it is protected, and we have high time frame draws to the upside, right? So after seeing this, let's say above we have like 4-hour highs, like maybe some 1-hour highs, maybe some equal highs, maybe some relative equal highs, maybe just a high like this right here, like literally this one right here. Or maybe like a new week opening gap, a new day opening gap, previous day high, etc. Right? Like the stuff I listed out earlier. So all you need to do is wait for a tap into 5/15 minute fair value gap. And then out of that fair value gap, you take the highest time frame inverse between the 1 to 5 minutes. Right? I'm sure you guys have seen this before. I'm sure you guys have even watched the video on this before. So look, we have this like some sort of structure I just drew. Like this is not going to be perfect. Like usually it's not going to look this perfect. But let's say it's like 9:25 here, right? Our draws are up here. So I'm going to cut this off to make this really, really not confusing. So boom. Also another thing you guys can use is like SMTs. So if you had like an SMT as well, maybe we came down, made an SMT with the low with ES. So like this is what NASDAQ look like. This is what NASDAQ looks like. And then maybe this is what ES looks like, right? And this is like a fair value gap. So let's say this is not Asia and London lows. It's just maybe 7:30 or 8:30. We have some sell side liquidity inside a 5 or 15 minute fair value gap. And then we come down at market open and we make that bullish SMT. So one index takes out the sell side liquidity and tap into the fair value gap. The other one does not. So you could also take a trade off of that 1 to 5 minute inverse, right? Super easy. So this is what it looks like. And let's say we have some high time frame draws up here. Assume these red lines are high time frame draws. I'm marking out this in this scenario. So all you have to do is wait for a 1 to 5 minute inverse fair value gap. If you guys get like really, or not get really, but if you guys start using this a lot, then you could even use the 30-second or the 15-second. But I would stay away from that at the beginning because you will just lose a lot of trades because you don't know what you're doing in the 30-second. So let me draw this out again. So all you have to do is right here. So as you can see, when we have a big displacing leg, usually we'll make a fair value gap, right? So for this example, let's say in this leg, we made a 5 minute fair value gap. So now you just scale down to the lower time frame. I'm not going to do it here because it doesn't matter. I'm using a freaking line. But you scale in a lower time frame. And once we tap into this gap, maybe on the 1 minute or the 2 minute, and we make a FVG on the way down right here, you wait for that to get inversed and you enter with break even at the internal high, TP at the buy side liquidity, right? Super easy, super similar continuation model. Wait for a tap into the 5 or 15 minute fair value gap, and you take the highest time frame inverse between the 1 to 5 minute, right? And again, make sure your bias lines with it. Make sure your stop loss is protected. So in this case, let's say in the example we just used, so I said that we came down in London session, took out Asia lows, and tap into a high time frame fair value gap, right? Because Asia lows made that high time frame fair value gap. So boom, we come down, tap into that high time frame PD array, sweep Asia lows. So this low is now protected, right? We should not be revisiting this low. It should be protected until the targets higher are hit. So now we're delivering off of that protected low. And then if we tap into, let's say, a 5 minute. So let's say we do some shit, right? So let's say right here, we tap into a 5 minute. Imagine this box I just drew as a 5 minute. Now, this is the new protected low, right? Because this low down here is already protected because of the reasons I just stated. So now, since this is protected, you look for the next protected point, which would be this low. And why is this low the new protected point? Because it's the next high, like, sorry. I swear I was on to something. I was going to say something super intelligent, but I just forgot what I was going to say. But basically, why is this the new protected low? Because this low right here tapped into a 5 minute FVG and swept these lows, right? So now we should not be revisiting this low. So now you can put your stop loss at this low, take an inverse value gap, break even at the internal high, TP at the high timer targets, right? So it was a really sloppy video, but I hope you guys learned something from it. This is like, this was very, like, I literally decided I'm going to do this the moment I decided to click record. So I'm going to give another example just in case. Let's say I want to be bearish, right? So it's probably better if I find like a real example. I don't know, bro. I haven't been taking a lot of inversion entries recently, but like it's the same thing for downside. So let's say like down here, actually this isn't bad. So look, what do we have right here? We have the NWOG that's not filled and London and Asia lows, right? So let's say, boom, let's say this is market open or some shit, and then we take out the buy side liquidity. So we take out London highs and London highs takes out Asia highs. So this would be the new protected point because it took out Asia, and we're tapping into, it looks like, a 1 hour bearish fair value gap. Like this is kind of just a big ass gap that needs to be filled, but if you like want to use it as a fair value gap for this example, you can. So boom, we tap into 1 hour fair value gap, and now let's say on the way down we make like a 5 minute FVG, right? So in this case that did not happen because we just ripped, but if you guys just envisioned it, let's say we made an FVG, right? We have this 5 minute, then you scale down to the lower time frame, and once we tap into the 5 minute, you take any 1 to 5 minute inverse fair value gap within this leg. So let's say we tap into it right here, and then on the way down we make FVG, right? Because like on the way up, sorry. So on the way up to tap this gap, we make, let me turn this indicator off. We make a 1 minute fair value gap. Then on the way down, we tap in the 5 minute and we inverse that fair value gap. So that's where you could take your entry, break even at the internal low, TP at, in this case, let's say the NWOG, stop loss at the high, right? So again, super, super sloppy video. My apologies. I'll make a better one in the future. But again, this is just very, I hope you guys learned something from this. This is a very, very simple continuation model. You guys can go back test it. Just remember, just find your draws and then wait for price to tap into a 5 or 15 minute fair value gap and take the highest time frame inverse between the 1 to 5 minute towards the draw on liquidity. Super simple. So I'm not gonna lie, that's it. There's really nothing to talk about today. I'm going to make a prop firm video like today or tomorrow because I'm going to Japan. So I'm gonna have to get that done before my flight tomorrow. But I will get that done for you guys. If you guys look also, Fundednext just dropped a daily payout plan. So I'm going to go over that. Perfect time to make this video. So I'm going to drop that tonight or tomorrow. This was just sort of an update video. And I just had to think of something to show you guys, I guess, because I don't want to just post a video of nothing. So hopefully that helps. If you guys, again, if you guys have any questions, just DM me on Instagram and I could further explain this like actually really well. I'm just not in the zone right now because I wasn't expecting to do this. I just decided last second again. Yeah, because like people have messaged me on Instagram. I'm answering a lot of questions, so you guys can always message me, and I'll see you guys.